commercial property to be impacted. Let's have a look. Hello everyone, I'm Florian.Heise and welcome to another episode of HeiseSays. Got my stein of coffee that I'm just about to finish this morning when I thought I'd go through a video, or do a video, on an article from commercialrealestate.com.au discussing the commercial property sector and how it is likely to be impacted. Now, a website, a new one I like referring to at the moment is the Data Room from Property Council of Australia. If you're a fan of the council or not, they've got some information that's useful. And one thing I like looking at, which, well, I think is something we should all keep aware, is just the office, commercial property, look at vacancies, and let's just look at what happened in the last recession. Over 25% vacancies in Australia. We look at our glorious leaders in Canberra, didn't experience a thing. But Sydney and Melbourne, well, look at that jump and look at this jump. So anyone who doesn't think commercial property is going to take a hit, well, I don't know how you can imagine that isn't going to happen, just based on the fact that we're entering into a recession. That goes without question. Some sectors, I would imagine, have definitely been in a recession for some time. Overall, the whole economy needs to be in negative GDP growth for a while. So, I mean, this can, combining the fact that we're in a recession, but also combining that we're going to have cultural changes due to people adapting to working from home. You know, I was talking to Certify the other day about a project and just mentioned, asking how it was all going. And, he's going all fine. And I was saying, one good thing is you miss the commute. Think about that commute every day. That's another hour of time, half an hour of time you have. That's a gym workout you could do every day. That can improve your health, change your whole life. Just by avoiding that commute. Yeah. Think about that, guys. More time with your family too. So I think there'll definitely be a shift in office design and demand. But then the question is, will the stock here, will the B grade stock, will that spur those owners of those assets to get more renovation work, to refurbish them? Could that be a business opportunity, guys? And here I'm talking to all the tradies and designers who are watching. It might be. They'll have to do something to keep those assets going. Chucking some money at dressing them up isn't too much when you've spent a fortune on the building or the asset. So let's have a look. Australia's biggest city, Sydney, for now, has been our ground zero for the pandemic. What's reassuring is that the state government's plans to reignite the infrastructure boom are expected to play a key role in stimulus and the post-pandemic economy. Well, it would be nice if this infrastructure boom included, infrastructure that would benefit the whole economy, not just Sydney, or the state, or the civilization. Potable water, cheaper power. Those are just two things. That's all I'd want. That's all I'd argue for, Combined with Sydney's strong fundamentals as Australia's most significant commercial centre, the city is widely expected to bounce back from what has been described by Prime Minister Scott Morrison as a once-in-a-100-year type event. But not all business and commercial property sectors have been impacted in the same way. Hotels and tourism have been dealt the biggest blow, while the pandemic has taken its toll on the retail industry. Offices and industrial properties are better protected, but overall all sectors are feeling the impact. In response to the National Cabinet's mandatory code of conduct for commercial leasing to soften the pandemic blow on commercial real estate, the New South Wales government introduced a $220 million commercial property land tax relief package. Landlords may access the land tax concession of up to 25% if they pass on the savings to tenants by discounting rents. Oh, isn't that nice? Isn't that nice? More generally, the Reserve Bank of Australia also played a part in insulating the economy against the impacts of the health crisis. The record low interest rate environment, which RBA Governor Philip Lowe indicated would remain for an extended period, can be an opportunity for some property players with existing capital as the cost of debts falls. Well, yes, it can. We saw that in an article this morning. The gentleman with 200 properties who's just planning to keep going because he's expecting the RBA to lock those low cash rates in and, well, the candle-on effect to hit property. While the overall commercial property market saw strong activity and demand at the beginning of 2020, That has changed due to the pandemic crisis. And yet a long-term undersupply in Sydney's office market has driven down the vacancy rate, prompting a long rental growth streak. Together, these factors are tipped to help buffer New South Wales office sector against the pandemic's economic shock. Well, what do you think, guys? Do you think it'll be buffered? Well, the pandemic has been hit, guys, but they're doing everything everything that they can to keep the property sector going. They're pinning their hopes on government spending. But what about when unemployment and underemployment creeps up? What about the cultural and buying behavior changes in people? We saw this in other articles. Less credit card spending, less people buying brand items, more people putting money aside. Will this be a never again moment for a lot of Australians, realizing I'm never going to be in this situation? I'm never going to be living hand to mouth again. And will that flow through to these businesses? In some regards, I'm hoping it is. I'm hoping people will learn from this situation, will adapt, will become more financially astute, will realize going down a complicated path of, I need to buy this to get these points to do this, sometimes just isn't worth the stress. So vacancies in the Sydney CBD moved up from 3.7% to 3.9% in the 6 months to January 2020, according to the Property Council of Australia. This was due to falling net absorption as major occupiers, particularly in the government sector, relocated to Parramatta while other tenants consolidated their use of space. One of the viewers of the channel, he meant he's an engineer, and they're doing a refurbishment for a large client. That client is reducing their square meterage from 20,000 down to 4. What do you think, guys? So, it is representative of a wider theme in Sydney's CBD office market, where office space is being withdrawn in mass, either to be refurbished and added back to the market, redeveloped into another office project, or converted for an entirely different use. Yet with the pandemic forcing many office dwellers to work from home, could this become a new accepted norm after the pandemic is contained? And what implications would this have on how we use the office? Meanwhile, industrial property is widely expected to ride out any shocks caused by the pandemic. Well, yeah, there's going to be increased demand for logistics. We saw Stocklands are pushing for that, guys. And, well, let me know if you've worked from home, guys, and if that's going to change your plan to think. If you're a small business owner and you've had to work from home, you've had your staff working from home, are you re-questioning the premises that you have, your commercial investment, the rent costs you have? Yeah, rent's bloody expensive, guys. When you cut it, you can definitely get some efficiencies. So, this is partly due to a short-term surge in demand for logistics and e-commerce, which is playing a significant role in transporting daily essentials for Australians as they practice social distancing. Beyond this, New South Wales remains the most in-demand industrial property market in Australia, accounting for nearly 38% of deals in 2019. Yet the pool of assets for sale is contracting as institutional investors buy up more industrial properties, particularly those in the logistics sector. For hotels, the picture has not been rosy. International travel ban is not expected to be lifted in the foreseeable future, meaning it may take some time for business to return to normal. So there we have it, guys. There we have it. Arguments that perhaps, well, Sydney property is going to take a hit, but commercial and industrial may be a bit better. Let's jump over to the data room. Let's have a look. Let's see what they have on the industrial sector. I don't think I've gone through that. City infrastructure, industrial. Let's have a look at industrial. And let's see. Okay, well, this is a bit different. Let's look at property returns. Property return index by asset type. What do we have here? Total returns, income return. What are we looking at? Office buildings. Okay, so office, capital growth is 6.1 and 5.7. So 5.7 is now. 5.7. Total return is 11.1 and 11.6. That's for a year. Let's have a look at retail. Whoa, well, look at that, guys. Total return for retail, negative 1.6. The income return has gone down from 5.1 to 5. Capital growth has plunged 6.2% in March 2020. Why aren't we seeing this reported anywhere, guys? Industrial. And there you go. Look at that. Wow. 11.8. So it's been pretty good. Capital growth has gone up, 5.7, more demand for industrial. So property value sentiment index by asset type. We'll have a look here. This is residential. I mean, there you go. There's the index, the sentiment down. Office. Whoa, that's crashed as well. You can't even, I got to move this up so you can see it, guys. Office. Retail. Plunge. Industrial. It's plunged too. Everything's taken a hit. Everything has taken a hit. Tourism. Look at that. Negative 80. Negative 80 on this index. 0 is considered neutral, guys. This is how many pessimistic people are in this sector. And finally, retirement. It's gone down as well. Now they're all going down, but that tourism hit, the scale is just crazy. That's just crazy. So there we have it, guys. Commercial sector to be hit. Industrial, where the greatest hope is. Tourism is just going to take a battering. As always, thank you for watching. Please leave your comments and opinions down below. Like, share, and subscribe to the channel. If you're a fan and you'd like to support the channel, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can use Gold Pass from the Perth Mint, buy a merch from HeiseSays, or support us via PayPal. Take care, guys. Have a great time. I'll see you in the next video.